Welcome to TaxTron Web tutorial video series. In today's video, we will be covering the FHSA, or First Home Savings Account, how to report FHSA contributions, and how to claim FHSA deductions using TaxTron Web software. Before we dive into the software, let's take a moment to understand what an FHSA is and how it works. A First Home Savings Account, or FHSA, is a registered plan that allows first-time home buyers in Canada to save for a qualifying first home tax-free, up to certain limits. To open an FHSA, you must meet the following criteria: be at least 18 years of age. Be no more than 71 years of age by December 31st of the year. Be a Canadian resident. Qualify as a first-time homebuyer. Please note, you must be a first-time homebuyer and a resident of Canada at the time of the withdrawal for the acquisition of your qualifying home. If you have never lived in a home you owned in the current or previous 4 years, you may be eligible for FHSA. Even if you own a rental property but have not lived in it, you can still open an FHSA. For example, a person who owns a rental property and has never lived in it may be eligible to open an FHSA. Opening an FHSA is simple. You can do it through banks, credit unions, or insurance companies, and contributions follow the calendar year. The annual limit is $8,000, with a lifetime limit of $40,000. The contribution period for your FHSA is a calendar year, January to December. And remember, any unused portion of your contribution room, up to $8,000, can be carried forward to the following year. Your FHSA account can remain open for up to 15 years, or until the end of the year in which you turn 71, giving you ample time to work towards your homeownership goals. Like TFSAs and RRSPs, a tax of 1% applies to excess contributions made to an FHSA for each month the account is over the limit. You have a few ways to manage over-contributions. You can wait until the following year, at which point the new contribution room may absorb the excess, or you can request a withdrawal or transfer of a designated amount from the over-contributed funds. This can be done tax-free or transferred to an RSP. Let's go through a real-life scenario. Assume Chandler opened her first FHSA in April 2023 and contributed $5,000 to the account. Now, let's see how to report that in TaxTron Web. First, log into the TaxTron Web platform. Head over to the T1 Client section and select an existing client. From there, create a new return for this specific client. Before proceeding, make sure that the personal information section under identification is complete and accurate. This is a crucial step to ensure everything is filed correctly. Next, navigate to the Income tab and locate the Profile tab. You will need to answer yes to the two questions. Did you open one or more FHSAs in the tax year? Did you work in 2023? Complete the T4 by entering the amounts shown in Box 14 and Box 22, $57,800 in Box 14, and $8,300 in Box 22. After completing the T4, now the calculated balance shows that Chandler owes $1,148.47 in taxes. Once you have entered the T4, click Next and you will arrive at the FHSA step. Here, enter the $5,000 contribution into Box 18. You will notice that the balance owing decreases, and Chandler is now have a refund of $291.26. By clicking on the Tax Deduction Summary tab, you can see the $5,000 FHSA deduction. As shown in the 5-year comparative summary, initially, Chandler's total income was $57,800, and after applying the deduction, the net income is reduced to $52,581.51. Now, let's explore a different scenario to understand how to handle claiming and used FHSA contributions. Chandler opened her FHSA in 2023 and contributed $8,000, but she decides to claim only $5,000 for 2023. In the FHSA step, enter $8,000 in box 18, but in the FHSA deduction box, enter $5,000. When Chandler files her 2023 return, her notice of assessment will show $3,000 in unused contributions, which she can claim for the 2024 tax year. To verify, let's download record keeping and scroll down the T1 General to line 20805, where you will see the $5,000 FHSA deduction. Next, scroll to Schedule 15. You will see the full annual limit of $8,000 and the unused contribution room of $3,000, which she can claim as a deduction for the 2024 tax year in addition to any deductible contributions she made in 2024. And that's it. If you found this video helpful, don't forget to like, share, and subscribe for more TaxTron tutorials.